Today I've brought in Fraser Munro. He is our head of partnerships. And if there's one thing I think you're going to want to take away from this conversation, it's what makes a good partner for Finimize and how you can use Finimize to be most effective for your organization. As head of partnerships, you're responsible for the sales team, the business development efforts, our events, our partner success, and so much more beyond. But I'd love for you to put that in your own words and maybe do it by sharing what your first impression was of Finimize before you joined and as you got deeper and deeper into the role, how it's evolved.
Right, so I'm creeping up on 4 years here now, which seems wild. I think my first impression, so I was a subscriber, I was a user, I loved the content, but my perception was really it's a newsletter business predominantly. So with me coming into the commercial side, that means I'm probably charging on with trying to sell ads in a newsletter. And what changed, I suppose, is that there was a lot more kind of layers to it, right? So I found that, there's a community involved, there is an events business that's prospering, there's a ton of data and insight into this space that we have and that I didn't realize we had. And then we have this entire kind of content partnership, content licensing arm to the business that I wasn't even aware of. So that changed quite quickly. And then I guess flash forward 4 years and what's evolved. I mean, fundamentally, a lot of that has just picked up steam over the years.
Two things jump out immediately from your answer there. One is that we've got tons of data, insights, tactics, if you will, and we just need to shout more about that and put more of that into the world. And the other is around industrialization. I feel like we've gone from being cavemen around a fire with a fish on a stick waiting to see what happens if you put it there, to having an oven and being able to generate warm kippers on demand whenever we're hungry. And that brings me to this question. What do partners or prospects, Finimize clients, do that sets them up for success with us?
I think the first thing that kind of successful partners end up thinking about first and foremost is they don't focus on the product shell first and foremost, right? So let me explain what I mean by that. It's not, okay, I want to get in front of retail investors. I need to now, jump straight to why I'm the best, why I'm the cheapest, why I'm the fill in the blank. It's recognizing that they are actually a more mature group of people than probably are given credit in the mainstream kind of press.
Yeah.
And recognizing that, it's saying, okay, how do I show up regularly? How do I add genuine value? How do I put whatever's happening in the markets into context and then use that context to actually kind of genuinely show the thought leadership or the expertise that they might have? And if you do that on a consistent basis, it sounds like quite pie in the sky, but actually when it does mean that you've got something to say about your product, you've built up the credibility, you've built up the trust, and you can actually land that message at the time that matters rather than just going straight to the end point.
You say it's perhaps pie in the sky. I don't think it is. I think it's the get rich quick thinking is almost the anti-example, right? And so if we bring it back to the investors we speak to every day, frankly, most of them are smart enough to know that there is no get rich quick scheme. But what's interesting is some of the partners who maybe, again, I asked you about the good ones, but some of the less good ones think, Finimize is the equivalent of a get-rich-quick scheme for getting assets into my vehicle, getting people to use my product or service, getting leads. And as with investing, there is no quick fix. I think if you're a brand, asset manager, platform, having these conversations, it's not performance marketing, it's not a get-rich-quick scheme. In a different world, when we host webinars or events for Finimize members, I always say to the speakers and the guests, we want practical, real examples, real takeaways, not theory. So I'm going to hold you to the same standard.
Okay.
Give me an example, walk me through a case study of how we work with partners and how we help them deliver great results.
Probably a recent one that springs to mind is we've been doing quite a lot of work with CoinShares. So, big crypto ETP asset manager. we worked with them, and from day one, the nice thing was they came in and said, okay, how do we deliver value on a regular basis, right? And that's music to our ears, because we think about it in the context of exactly what you're suggesting, right? We have an audience, we have a trusted relationship with these members, we want to put out content that we're proud of, and they were very much on board with that, right? So that frame of mind helped from day one.
Yeah.
What that actually looked like in practice was we sat down and produced a bunch of really high quality educational content that we set up a distribution plan around. So there was a kind of always on component to it.
Yeah.
But the more interesting and relevant part was, crypto's been on another crazy run, as it always is. But the context of what's happening in those crypto markets meant that we can not just talk about crypto, but position this education alongside it, right? So we give people real education founded in what's happening right now. We then said, okay, we've built up some trust, we've built up some credibility, and when there was a more timely, opportunistic thing CoinShares were caring about and our users cared about, which, for example, a couple of weeks ago, the ISA rules changed around crypto ETPs. Yep. So as of April 6th, users could no longer invest into crypto ETPs in their ISA. So the call to action was, before that, do it now.
Yeah.
Now, they built up that credibility, built up that trust, educated our users, which meant that when they wanted to land that message, it landed, because they'd actually done some of the hard yards. They've put down the foundations, and then they had something that's a bit more pointed, a bit more direct that they wanted to say, and it worked.
3 things jump out there. 1, you said this up top, no shilling.
Right.
It's a collaborative educational process, and yes, we want action. And when the time is right, you help partners push towards action. 2, and I come back to this, whether I'm talking to you or our content team or our product team, it's all in service of retail investors.
Yeah.
And we're not going to do anything that puts them in harm's way. And we're actively trying to do the opposite. So if you want to come on that journey with us, we'll find a way to make it work.
Yeah.
And the third point is around meeting investors where they are, which I've said so many times that I almost, it just sort of blends into the furniture in my head. But we know that there's a ton of conversations going on around crypto products, whether that's ETP, whether that's direct on exchange, whether there are questions on storage. Let's figure out where the conversation is, figure out how we can be most helpful, whether that's education, insights, a blend of all of the above. Tap into the news, bring people along the journey, do it together with CoinShares, and then when, as you said, when there's an axe, to use a tradery term, when there's a deadline coming up, when there's something that they need information on in a timely way, we're there and we can support CoinShares in delivering that message. What kind of questions do partners ask when they come in the door at Finimize?
Right, so bucket 1, I'm a traditional financial service business. I want to reach retail. I want to crack retail. What do we talk to them about? So what they are looking to do and what we try and help them do is the playbook that they've always used for their investment, bucket of people. So whether that be intermediaries, other institutions, all of that. There's great thought leadership. There's great insight. They have a bunch of, intelligence that they should and could share with retail.
Yeah.
What we're talking to them about is we can help you with translating that great insight, translating that thought leadership, distributing it in the right channels, in the right places, in the right formats, and genuinely adding value and educating this next generation of end investors so that you avoid the challenge that is often out there of, why are you any different from any other business?
Got you. Have you ever seen the show Scorpion?
I have not.
Okay, so the setup is, and stay with me here, it's 4 super geniuses, like IQ through the roof, but IQ so high that their EQ is basically 0. And then along comes, I think her name is Paige, and she's like this lovely regular person, but EQ, at least relative to these guys, through the roof, right? Her job is to, be the translation between these geniuses solving problems and diffusing bombs and catching terrorists and law enforcement and being like, look, this is what these guys need in order to perform. And here's what they actually mean when they say some jargony things that they don't mean to say, but they can't communicate any other way. I feel like what you've described there is Finimize being Paige for financial institutions who are high IQ, low EQ, at least when it comes to retail investors.
Nice. Be more Paige.
Be more Paige. And for the group of people who are already retail native? How are we answering their questions?
So for these guys, it's about sitting down and saying, how are you thinking about a content strategy? What user are you going after? What challenges are they suffering from? What does the current content mix look like that you're serving them? What gaps have you got? And then building that essentially from scratch, right? Yeah. So we can take some of the stuff that's either, in our channels and off the shelf, or we can produce things completely from scratch, build that strategy, build that playbook, hand it over to them, help them implement it, and they're off to the races.
So you've just come back from meeting clients and prospects in the US. What are you seeing out there? What sorts of conversations are you having?
Right. So I was in Miami at Future Proof, which, apart from the challenge of 25-degree heat while the UK was in snow, a couple of big things that stood out. I'd say 3 big things, right? So the first one, everyone's talking about AI. Yep. Everyone's always talking about AI, but it was interesting because it was the nuance of kind of not just how can I use it internally, how can it make me more effective. It's how can I use it to support my own clients. So how can I leverage it? How can I use it to produce more, to produce better, to personalize it, all of that. The second bucket is the rise of retail, I would say. Okay. Now this one sounds very self-serving, which I appreciate, but hear me out. This was predominantly a wealth advisor event I was at. So historically, it's, big asset managers, loads of wealth managers, loads of advisors. It wasn't like that this time. When I go and speak to either these big ETF issuers, these big platforms, they are waking up to retail and they are interested in how they can get in front of more retail. They want to know what the retail dynamics are like what the playbook is for retail, all of that stuff, which adds a different kind of context and texture to the toolkit that they're using. Yeah. So that would probably be the next bucket. The third bucket, the ETF boom. Spoke to tons of these ETF issuers out there. They know they're in a huge tailwind. They know it's growing. They are obviously looking to ride that wave. For them, it's more of a case of how do they stand out, right? So you and I have sat down and we've spoken a little bit before about, what are the ways that people can select between different ETFs. I was having a conversation like that with all of these guys. So I would call the brutal way of describing it would be the sea of sameness problem. Yeah. How do I actually make myself, X ETF, stand out from my competitor next door? That was the challenge that kept coming up over and over. 2 small things I would add to the rise of retail point that I was speaking to these guys about. So one, everyone's talked about this, wealth transfer. Yeah. There's going to be a shift. There is a shift. People are waking up to that shift, and that is super important. So that came up time and again. I think the other sort of more nuanced part that's maybe underlooked that we've come and seen in a lot of our data is, yes, they're going to be inheritors. Yes, they're going to have a lot of cash, but don't sleep on them now because actually they have probably more cash than you realize already. So these younger investors are actually putting money into the market.
I've had conversations probably even before when you joined, sitting in front of wealth managers, asset managers, etc., saying this is coming and you should be ready for it. And the challenge, the pushback we would get was, yeah, it's coming, but it's not here yet. It's here. Yeah, it's the doomsday clock. It's less existential for the species of humans, but it is existential for these financial services firms. And so back then I thought, okay, maybe we're just really early to this. Now, if someone says, oh yeah, but it's coming, but we're fine, we've got time, I just think, oh, you're about to get washed out when the flood starts. So what are the differences between the US retail investor market and elsewhere?
The retail market's 10 years ahead. What that means is they're sitting around the dinner table talking about stocks, talking about portfolios. Everywhere else, places like the UK, we're sitting talking about cash, we're talking about savings. What that means for providers and people trying to serve retail out there is it feels like they're pushing in an open door, right? There's more people, they're more mature, they get it. But that also means it's a fiercer competition. They need to work harder to stand out versus places like the UK. And otherwise, it's different job to be done, right? There's way more of an open goal or what it feels like, but it's just slightly nuanced, different jobs they have to do. That's
a great segue to talking about the recent news around retail investor risk warnings in the UK. And I wonder what you make of that, and is our inbox blowing up now that there's a potential easier avenue to sell to retail?
Sort of. It's interesting, the dynamic here, right? So it feels like this is a massive piece of news and people should be scrambling to do more, and the floodgates are open a little bit. I think the reality is there's a little bit of our industry, I think, suffering from kind of being scared to go after that first mover advantage that happens in other places, right? So what I mean by that is it feels like everyone sort of sits around, watches what others do, sort of is too scared to step out of their line and do something a bit different. Therefore, this sea of sameness problem that I mentioned is just regularly coming up. And in the context of the FCA, obviously, I appreciate, regulatory compliance, that there's things you have to do. But when even the FCA is leaning in and saying, we want to make this easier for people to understand, wow, what an amazing opportunity for people to create something genuinely useful for a change.
Yes.
So I think there's a massive opportunity here. I think people should be leaning in. They should be pushing the boat, pushing the envelope slightly. Yeah. What do you think?
I think between this and targeted support, there's basically no excuse.
Yeah.
And so easier said than done. But if I have a conversation, or if you have a conversation with somebody who comes up against risk warnings or a lack of targeted support as a reason not to take action, the next call should be to their boss and they should get fired. This is and I'm saying that, tongue in cheek, but as a customer of these places, as a retail investor, I have literally had to do it all myself. I have been abandoned. I have had no support, targeted or otherwise, and risk warnings can go take a long walk off a short cliff. They've done nothing to help or protect me. And again, I get it. People are covering their asses and they're afraid and they don't want to get in trouble. And they should be being responsible. I'm not saying be irresponsible, but frankly, it's one less excuse, and I'm sick of the excuses.
Even to build on that as well, right? Risk warnings is one big part of it. The other is just kind of hiding behind, compliance has made me do this. One of the things I've said before is kind of think how much good insight goes to die in PDFs in this industry, right?
Yeah.
There's tons and tons of just waffle and nonsense that just never gets read.
Yeah.
So I'm a retail investor. I go onto my platform. I'm shopping around and looking for an opportunity. Am I really going to read, the fact sheet, the KIID?
Yeah.
No. I don't know if I've ever read one, frankly. Yeah. This is the opportunity to change that. The people who do and lean into it and actually try and make it something engaging and useful and distribute it in the right way are going to win. And the ones who continue to do as they've always been doing are just going to get left behind. So one of the questions that comes up quite a lot with clients is, okay, we'll go into this partnership, we'll produce content together, you're going to help it. How do we make sure it's not just another shill, it's not just another ad, it's genuinely going to land? Yeah,
I always love that question when it comes in from partners, because it shows they are thinking about the right things and they are not treating us as a performance marketing get rich quick channel to trick retail investors, but as a partner to help inform, engage, educate, retain important clients. On the one hand, there's a bit of church and state about it. On the other, because of how we're set up and our mission, it's not that difficult at all. So what does that mean in practice? Our assets are our content and our events. Because we're not an investing platform, we are wholly independent. We're not incentivized to make someone do something or something else. We want to give you the tools to make the best possible decision. 2, and maybe there should have been 1, it's all in service of the modern retail investor. And whether that's through our newsletter, our pro research, or the Modern Investor Summit in New York, we need to meet them where they are, give them news, insight, research. Again, help them be their own financial advisor, make more informed investment decisions. And we're going to do that come what may. And if you're a partner and you want to be on that journey with us, absolutely, we will work with you to do that. But, quite selfishly, or call me arrogant, you don't get to drive the car, right? You don't get to tell me how I talk to these retail investors that we spent years talking to, who trust us, and so on.
The way I feel like I describe it internally and externally to partners is we would never put out content we're not proud to put out.
Yeah.
Right? Our editorial content, we're super proud of. Our partner content, we're super proud of. They go hand in hand.
Yeah. So normally at this point in the podcast, I like to ask, what's the craziest headline you've seen this week and what does it all mean for retail investors? But I know what the craziest headline you've seen this week is, and it's around ISA season. So maybe just for our audience, do you want to share what that was and what you made of it?
Sure, yeah. So worst ISA season ever, I think is the broad headline. My take on this has been, when I look around and see the activity, particularly from, the businesses out there, the providers, the platforms, it just feels like everyone's running the same playbook year after year after year.
Yeah.
So we've been bombarded with, the same TV ads, the same tube ads, like we're the cheapest here and we're commission free and fees and all of these things. And frankly, I think retail is just a bit bored of it. I think they're a bit over it. I think there's just been an over concentration of let's put all of our marketing budget into this tiny part of the year, bombard people with product messaging and hope for the best.
Yeah.
And frankly, I think we're letting down retail for the rest of the year because of that. So instead of putting all of your eggs in the ISA season bucket, so to speak, why not actually try and show up consistently, add value over the rest of the year, do the hard yards with, giving people context, giving people education. And then, yes, when it comes to ISA season, you can, put some of those eggs there, but you'll have done the heavy lifting. That means it's just a kind of natural next step to say, right, now I'm going to sort out my ISA as a retail investor.
So I make you 100% right on all of those things. What I would add is, if I look at the Modern Investor Pulse data, we ask a question, where do you want to invest but don't feel like you have enough knowledge? And for the first time ever, stocks was top of that list, which I frankly think is unforgivable. Yes, we've had volatility around the Middle East and energy, and that's scary, and that might leave some cash on the sidelines. But for investors to be saying it's not complex derivatives or digital assets that I'm struggling with and trying to wrap my head around, it's basic bitch stocks, means that a ton of people haven't done their jobs. And it makes me angry because, we're doing the job for them.
Yeah.
We're trying to help retail investors in our corner of the world, but people aren't doing anywhere near enough. And yeah, I think it's unforgivable. Let's just zoom out, right? We've had, with a couple of blips, a near enough uninterrupted bull market for the last 10 years, give or take. Yeah, pandemic, 2022, a little bit around AI in various pockets, a little bit around the Middle East, but otherwise an uninterrupted bull market. And so you haven't had to know very much about stocks to make money investing in stocks. You just buy the index, close your eyes, money machine goes brr, stock goes up. That's been the playbook by and large. And so instead of fixing the roof while it's sunny, platforms have sat on their hands and not really done anything to, back up the education or have the library or have the muscle to flex when things are tricky. And now, instead of trying to build that muscle and solve that problem, they are running the ISA playbook, as you described, and then they are hand-waving at areas that might be under pressure, justifiably perhaps, like private credit or AI sort of SaaS apocalypse, hand-waving, catastrophizing. 4% of retail investors are in private credit. Don't get me wrong, I want those 4% to be okay, but 60% are in stocks. That's where you need to spend the energy. So I'll get off my soapbox, but Jesus Christ.
Talking about products, talking about providers, talking about doing things differently, the Finimize Awards, how's it all going?
Really exciting times. The votes are rolling in by the truckload, and by the time anyone's watching or listening to this, we probably will have done the first cut of the data to finalize the awards. So just as a reminder, what we're doing that's unique here is we are getting people's views on the platforms, products they use, and then allowing the data to shape the awards that we essentially give out. And so once we have those, again, we'll continue to collect data, and once we shut off that survey, we'll be in touch with winners and we'll go from there. But there's tons of interest in terms of sponsors because, as I said earlier, we serve retail investors. If you want to be on that journey, show that you are on their side, there's a ton of sponsorship opportunity there, and we're having those conversations.
I think we should talk about that elephant in the room with the sponsorship as well, right? So what's your traditional award setup? I pay to enter, I pay to influence. Obviously, we're doing none of that. There is still a commercialized opportunity around this.
Yeah.
What that actually looks like in practice is, we're not going to not announce winners who pay or do not pay.
Yeah.
The nice thing, like you say, is you can be on the side of a retail investor. You can license the award that we win. We're also putting on this super exciting event in June where we're going to get the leading industry professionals to come along, talk retail space, network, and learn.
And they're going to understand why people win and why they don't. Again, we're not making these decisions in a dark room with smoky ceiling. The data's driving us, and the data will show why somebody wins. Is it because they're mobile first? Is it because their customer service is amazing? And my favorite sort of stat around this is if you look at what US modern investors care about and you map it to the UK as a comparison, mobile first, really important here. Stateside, less important. So if you're going to crack the US, you don't need to worry about being mobile first. Don't get me wrong, it would help, but it's not the thing that's going to move the dial.
Maybe one other sort of nugget, sneak peek of what we're already seeing in the data. Again, going back to what people are shouting about in this industry. Everyone's talking fees. Everyone's talking commission free. That's not actually what people are caring about. They want ease of use, like you say. They want mobile first. So instead of everyone shouting from the rafters about being the cheapest, make the product experience better, and then maybe shout a bit more about that.
It's back to that point you made earlier about ISA season, everyone follows the same playbook, and also with regulation and risk warnings, everyone wants to be in line, no one wants to stick their neck out, no one wants to try something different. One guy over there shouts about fees, the girl over here shouts about fees, and it's like, or you could do something different and something that matters. But playbooks.
It's like that Spider-Man meme. Everyone's just standing,
exactly,
shouting at each other, talking fees.
Exactly. Fraser, this has been great. Thank you so much. I think I promised deep insight into the partners we work with, how we work with them, and why. I think you've delivered.
Thank you. Happy to do it again.